So hi guys, hello and welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Brand new week and we are perched at record highs. Whether or not this rally has more legs to it or not, we'll be discussing that with a big market voice on the show in just a bit. And of course, we'll also be taking up all your stock related queries with our technical expert on the show. So if you have any queries, keep them coming on our live feed and we'll try and take them up. But before we move any further, let's take a look at the top headlines at this hour. Wall Street notches gains for the 7th straight week, its longest streak since 2017. Dow and Nasdaq both set record intraday highs on Friday. Asian markets trade largely lower this morning ahead of the Bank of Japan's policy decision and Chinese economic data later this week. Meanwhile, the GIFT Nifty is hinting at a mildly lower start for the Indian market this morning. Oil prices rise to over $77 a barrel as demand outlook improves post dovish commentary from the US Federal Reserve. Meanwhile, dollar is off lows after New York Fed president says it's too premature to speculate about rate cuts now as inflation remains the key focus area. Among stocks in focus today, Zee Entertainment requests Sony to extend effective date of merger from the 21st of December. This stock will be in focus and Sunil Singhania owned Backers picks up additional 1.3% stake in Kumar Infra. Also, PSU Banks will be in focus amid merger buzz. And government is likely to table the telecom bill in the Lok Sabha today to replace the 138-year-old Indian Telegraph Act that governs the sector. The draft bill had proposed to bring internet-based calling and messaging apps under its ambit to enhance user safety and also proposed to curb the power of TRAI. Well, let me bring on board now the big market voice that I had promised earlier in the show. Harsha Upadhyaya, Chief Investment Officer, Equity at Kotak Mutual Fund, joins in this morning. Great to have you on the show, Harsha. First of all, I want to get your thoughts on the kind of rally that we have seen on Dalal Street. Relentless rally. FIIs have just started to come back into the Indian markets. And, you know, given the fact that we have been hitting record highs almost on a daily basis, do you think now we are, just about near about that top, or do you think there's still some way to go, given the fact that large caps have just about started participating?
Good morning, Nandita. If you look at global cues have been quite positive. You have seen all the macro concerns kind of abating day by day. If you look at the fundamentals, they've also turned positive as far as earnings trajectory is concerned. So overall, the undertone continues to be quite positive. Having said that, it is very difficult to predict the market tops or market directions in the very short term. So to that extent, I won't hazard a guess. But if you are an investor who is looking at reasonable investment in equities from a medium to long term perspective, then I'm sure that Indian equities are going to give you decent returns. However, the volatility could increase as valuations go up, and as you rightly mentioned, on the large cap side, the comfort is little more than the broader end of the market, where valuation seems to have been much higher than our comfort levels at this point in time.
Right, mid and small caps, of course, entering overvalued zone. That's the consensus view on the street. But which are the pockets that are looking extremely frothy at the current juncture?
I don't think one should be looking at a sectoral perspective for frothy valuations. I would say as you go down the market cap curve from large to mid to small and micro, that's where the valuation discomfort continues to increase. And similarly, as liquidity goes down, there are many illiquid stocks where the float is much lesser than usual number that you would see for large caps, for example. And that's where the valuation discomfort is more. So net, I would say smaller market cap companies and illiquid stocks are the areas where one should be really cautious about, because not all of them have gone up because of the strength in fundamentals. They have gone up because of lack of liquidity and money chasing some of these names. So to that extent, it would be prudent to remain invested in large caps or have a large cap tilt to your portfolio.
Right, talk about large caps. Which are the pockets that are looking extremely comfortable with respect to valuations? Would you say that IT is one pocket, even though it has rallied quite a bit in the last few sessions? Do you think the fact that they are just about near about their long-term averages offers valuation comfort, and one could perhaps look at this? Or do you think that the euphoria around the Fed's hint of rate cuts is a little too early, given the fact that, just yesterday we had the New York Fed president saying that, it's too early to speculate on the timing of a rate cut. But it's the hopes of early rate cuts that has, spurred the kind of rally that we have seen in the IT pack. Do you think it's justified?
If you look at the IT services pack from a business perspective, nothing has changed in the last couple of weeks, right? But all that euphoria that we have seen is because of expectation that Fed will cut meaningfully in 2024, and we have seen the peak in the very short term in terms of interest rates. So it's more of a valuation re-rating rather than change in business fundamentals at this point of time. So to that extent, I wouldn't say that this is the most attractive sector to invest in amongst large caps. I would say probably banking and financials is the space where there is a reasonable amount of valuation comfort within large caps. And also this is one pocket where we haven't seen much of short-term performance as well. So to that extent, there is no worry of a big downside, even in case there is some volatility on the downside in the markets.
Do you think it's time to go a little contrarian and look at those unloved sectors like specialty chemicals, for instance? Would you advise someone to look at that pocket now?
Yes, we have turned positive on specialty chemicals. Not so much on commodity chemicals yet, but definitely the destocking that we have seen in specialty chemicals and some of the fraud that was there in terms of the pricing seems to have got corrected. And we believe that as you look at the medium term, from here on, the margin should start to gradually improve. And anyways, the volume growth continues to be still good for the overall segment. So that's something that could be looked up in terms of medium term possibility of giving decent returns.
Right. A couple of more questions. Heading into the general elections, would you bet on consumption at the current juncture, or would you say, play the market via the capex theme?
At this point of time, we are a lot more positive on capex beneficiaries than consumption beneficiaries. If you look at the consumption trend, especially the rural consumption trend, that continues to be still weak. Although in a pre-election year, generally we have seen a focus coming back to rural areas in terms of spend and that helping consumption trends. However, this year we should also keep in mind that monsoon has been deficient. It was deficient by about 6% on a long-term average basis. So to that extent, the push that may come in a pre-election year could get a little bit nullified because of the deficient monsoon and lack of confidence from rural population in terms of going ahead and spending. So overall, this could still remain a dark horse if you want to bet for maybe next year, assuming that there is no reason to have another bad monsoon next year. Then probably this sector can be looked at. Otherwise, I would say capex beneficiaries would be a good part of the market to remain invested.
Right. Lastly, your thoughts on the entire NBFC pack. I know you mentioned that, banking and financials one pocket that can be looked at. But particularly for NBFCs, we had the RBI crackdown on unsecured loans, right? So in light of that, would you still be bullish on NBFCs at the current juncture?
See, the caution that came from regulator on unsecured consumer credit, that is probably more to do with the fintech area where most of the loans have gone to consumers who have taken loans up to 50,000 rupees, for example. And that's unsecured low-ticket lending that has happened. But if you look at the major banks or major NBFCs, I don't think anyone has extended themselves to this part of the lending. So overall, I would say there is no direct impact on banks or NBFCs on what has happened in terms of increase, in terms of risk weights on unsecured consumer credit at the lower end. Yes, to an extent, the growth rates could get impacted for the overall sector, but most of the listed players, I would say, will remain and continue to grow at growth rates that we have seen in the recent times.
Right. I cannot not ask you about the recent listings and the new age tech firms. Anything catching your fancy here? The likes of Zomato, for that matter, has seen a good turnaround, when it comes to profitability as well. Anything catching your fancy in that space?
See, some of the new tech companies, this is not a homogeneous basket. Every company needs to be analyzed based on the underlying business. And if you are positive on the underlying business and the valuations, then probably you can go ahead and buy. But just like traditional basket where every business is different, every set of company will have a different set of valuation yardstick, etc. You need to remember that as well if you're analyzing IPOs or new tech companies. So for us, I don't think we can bracket every company that's using internet as an enabler as new tech and continue to buy them or continue to sell them irrespective of their underlying business. So yes, food delivery is one of the areas where we have been positive of because of how the path to profitability has become a lot more visible at this point of time. So we continue to be positive on this sector.
All right, food delivery and the business looking attractive. But with that, Harsha, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. It was a pleasure chatting with you.
Thank you, Nandita. Have a good day.
Thank you. Well, that was Harsha Upadhyaya, CIO Kotak MF, sharing his thoughts with us. But let me also bring on board our technical expert for today. Joining me is Rajesh Palviya of Axis Securities. Great to have you on the show, Rajesh. I look at the screen, it's like unstoppable. 21,500 is where we are at almost. But would you say now that we are entering into that overbought zone, or do you think more legs to this rally and there is perhaps higher highs being indicated by the charts?
Good morning, Nandita. Yeah, definitely we are having very extremely bullish trajectory for the market, and the kind of buying interest across the board is clearly indicating yes, this rally can extend further. Though we are on the near-term chart structure, some overbought trajectory is already there for some of the sectors as well as for some for index also. But still, we feel that the kind of flow which we are getting from the retail and from the institution side, that clearly shows that still a lot of buying interest is there. Even the market has already moved up sharply in last couple of week. So we do believe that if we continues to hold about 21,250, 21,300 kind of level on the Nifty spot, then possibly this rally can extend further, and maybe we can see a level of 21,600 to 21,800 in the continuation of this up move. So as such, structure is still bullish. There is no as such tiredness in the market. Lot of sector like IT has also started contributing to this rally. So the sectors where we were seeing underperformance or consolidation in last couple of months, now they have started showing good traction in terms of buying. So I think this really can extend, and maybe towards the end of this calendar year, we can see furthermore, upward momentum towards 21,800, even 22,000 in the continuation of this up move. So I think one should remain on the long side of trade, keep trailing your stop loss on the higher side. Even on the bank Nifty also, there is a strong buying action happening across the board. PSU, private, both segments on the banking space are showing good traction. So I think on the banking bank Nifty also can show furthermore upside. Once we able to cross above 48,200, then bank Nifty can also scale up to the level of 48,600 to 48,800 in the continuation of this uptrend for bank Nifty. Now stop loss on bank Nifty spot should be at around 47,800. Till these levels are intact, I think one should remain on the buying side of trade.
All right, those are the levels to watch out for on the Nifty Bank Index. But I want to get your thoughts on some of the PSU banking names. Of course, over the weekend, there was a merger buzz around the likes of Union Bank and UCO Bank as one merger, and Bank of India and Bank of Maharashtra as the other. Of course, Finance Ministry has clarified that mergers are not on the agenda for the parliamentary panel meeting with banks later later next year, right? But given the fact that these PSU names have already rallied quite a bit, how are these names poised on the charts? Plus SBI, I mean, that was the only missing piece when it comes to the PSU banking rally, and that gap rather has also been filled. So PSU banks like SBI on one side and these merger candidates, of course, are expected to be in focus. Do you see more action when it comes to these names?
So overall structure for PSU banks are in the bullish side. As such, there is no weakness. And looking at the overall near-term, short-term as well as long-term structure, we hold our bullish view for most of the PSU bank. You spoke about Union Bank, UCO Bank, UCO Bank is almost on a verge of giving breakout to its multiple, supply zone on the daily chart. That is at around 42 rupees. Once it's crosses those level, then UCO Bank can also move up further towards 48 to 50 rupees kind of level. Union Bank is already enjoying a series of higher top, higher bottom formation, and stock is already trading about to their weekly, monthly breakout level. So looking at the Union Bank structure, if it's holds above 123 level, then possibly the next target for the Union Bank we can see towards 145 to 150 on the higher side. SBI very strong breakout in the last week, and looking at the breakout, we believe that yes, SBI can also contribute to this rally, and very strong buying action. Long built up was clearly there on the derivative data on the monthly chart. Also, almost it's a breakout of consolidation of almost 8 to 10 month. And these breakouts may give furthermore, fresh buying action in the market and we can see SBI to move further higher towards 675 to 685. So one can look to buy this stock also with stop loss of 632.
All right, that's the view on the PSU banking pack. But let's talk about a Zee. It has requested Sony to, extend the date of merger beyond December 21, right? Now, Elara believes that this is a positive given the fact that, it means that there's higher possibility of the merger going through. If you look at the Zee stock over the last 1 month, it has managed to clock in a solid 14% kind of a rally, but off late has been under a bit of a selling pressure. Given the fact that this is a fairly volatile stock, would you advise a trade in this counter, or would you say avoid it?
Yeah, Zee is a very volatile stock, yes, because whatever momentum is coming in the stock prices, that is because of news flow only. So even if we analyze this stock based on the technical, that will again, the news will give the major impact to the stock price at this moment. But at this moment, the technicals are suggesting that as the stock has given a breakout of it on the weekly chart of falling trend line, looking at this breakout, 270 is the important level to watch for. If it slips below again, 270, then we may see some profit taking in the stock, and then it can go down to 260 level also. But if it's stay above 270, 71 level, then I think there could be a follow-up buying action, and then possibly stock can scale up to the level of 290, 95 level. That is the next hurdle for the stock. About 295, there could be a strong short covering action, and then we can see a rally towards 330 also. But at this moment, 260 to 290 is the range where we expect that the stock may consolidate for some more time. Either side breakout or breakdown will decide the major direction for the stock.
All right, that's the view on Zee. But we let's take up some viewer queries that are trickling in this morning. The first one from Suresh wants to know your thoughts on sugar stocks. We also have a query particularly on Praj Industries. This one is coming in from Selvan. So sugar stocks have, of course, had a pretty bitter run on the bourses, so to say, after the government's curbs on ethanol production, right? But would you advise investors to look at these stocks at these levels, given the fact that this move is expected to be a temporary one?
Nandita, I think this is a temporary knee-jerk reaction to the news because ethanol blending is the theme which is driving the most of the sugar stocks, and I think yes, this curve can be a temporary impact to the prices. Looking at the Praj industry structure, we do still hold our bullish view on the stock, though overall long-term structure is still holding the strength, and this correction is giving you opportunity again to buy the stock in this decline. If you analyze on the monthly chart, the stock is almost trading near to its last 3-4 month consolidation support area. So I think 520, 500 is the important support area on the downside. Until the stock not breaks below 500 level, I think one should use this decline as a buying opportunity. If it holds above 500 level, then there is a high possibility that the stock may again show pullback action. And in the pullback, we can see a level of 590 to 610. That's the immediate level we can see in the Praj industry on the higher side. Those who have already bought in the decline or willing to buy at this moment, they can keep their stop loss to buy and accumulate the stock towards 500. Upside target is 595 to 610.
All right, you can use the dips to buy into sugar stocks. That's the view coming in from Rajesh. But Rajesh, we have a query coming in on solar industries from Debu K. He wants to know your thoughts on this particular stock. There is negative news flow around this stock. In fact, 9 people have been killed and 3 injured in a blast at its Nagpur factory. The stock has had a fairly good run over the last 5 days or so. But on the charts, would you expect some bit of downside now, or do you think it could see some bit of reaction to this news flow, right, in today's session?
Yeah, there is news of accident in the plant of Nagpur for this solar industry, but still, if you analyze the overall structure for the stock, that is clearly in the bullish trajectory. We could see some corrective move due to this news flow, but still, I believe that on the downside, 6,500, 6,400 are the major important support area. Though we have already seen some corrective move in last couple of weeks, and stock is shown some reversal in the last week also from this corrective move. So on the decline, 6,400 is the key level to watch for. If it's hold those level, I think again the stock will absorb all the selling pressure around those level, and then possibly again we may see resumption of uptrend in next couple of trading session. Once stock crosses above 7,000, 7,200 level, then possibly that rally and resumption of uptrend is likely to be there in solar industry, as overall long-term structure is still in the bullish trajectory.
Right, that's the view on the solar industries. Hope that answers your query. The next one coming in from Kartikeya Singh on PFC. He is sitting on 100% profit when it comes to a PFC. Do you think it's time to book profits, or do you think he should continue, investing in the counter and perhaps wait for higher levels, because this stock has seen a phenomenal run?
So very strong run in PFC, RFC, REC. These both stock have done well in last couple of months, and I think yes, if you are already sitting in the profit, you can book some partial profit, because we have seen very strong really most of the power stocks and power proxy stocks. So you can book some partial profit, but still trend is still on the bullish side, or you can adopt a trailing stop loss strategy at this moment. Now trailing stop loss to protect your profit should be at around 385. That's the level you should keep eye. If it's a hold 385, there is no as such worry in terms of holding long position. If it breaks below 385, then you can think of booking some partial profit because as it's already overheated trajectory for most of the power stocks. So I think if any volatility comes in market, we can see some profit taking to happen in power space. So keep trailing your stop loss. At this moment, 385 should be your stop loss, and there is no as such resistance because stock is almost trading at all-time high trajectory.
Last few queries. This one is coming in from Nitin Limai as well as Vijay. They both have queries on Indiabulls Housing Finance. This stock is perched on at its 52-week highs. In the last 1 month, it has given almost 20% return. Should one chase momentum here?
I think Indiabulls Housing Finance, yes, he can hold the position, but not for trading perspective. For positional perspective, stock is showing some sign of making a base on the monthly as well as on the weekly chart. Looking at the structure now, the immediate and important support area for on the downside is at around 205. That level needs to watch closely. If it's not now breaks below 205, then there is a high possibility that we can see in next couple of weeks stock may show upward momentum towards 245 to 255. That's the next level we can see in the Indiabulls Housing Finance. So I think 205 should be your stop loss to hold your long position, but not for trading perspective. You can hold it in cash segment for positional perspective.
All right. One last query then. Yagnesh wants to know your thoughts on Nestle. It has been consolidating and he wants to know if a dip towards 18,000 on the charts is possible. What are your thoughts?
See, we have seen good traction in most of the FMCG stocks also in recent past. Nestle is one of the stock where we are seeing continuously stock is moving in higher top, higher bottom formation, and stock is in uptrend. As he is expecting to buy the stock around 18,000 level, that is still very far from the current level. Almost stock is trading at around 24,000 level. Yes, definitely. If you get any opportunity around 18,000 mark, yes, you can buy this stock, as that would be a healthy correction in the stock prices. But at this moment, the immediate support area on the downside for this stock is at placed at around 23,300. That's the important level to watch for in minor dips in the near term. So till 23,300 not taken out by the stock on the downside, I think trend is likely to remain on the bullish side. And once the stock crosses about 24,800, we can see further more higher level towards 26,000 to 27,000 also.
All right, that's the view on Nestle. Hope that answers your query. But with that, we've come to the end of this query segment. But Rajesh, as usual, before I let you go, what are you spotting on the charts for viewers this morning?
So there are a lot of opportunity in the market, what to buy, what not to buy, as the whole market is looking very bullish at this moment. So now three stocks ideas from where we feel that, furthermore upside momentum we can see. That is first is from metal space, very strong breakout on most of the metal stocks. Tata Steel is one of the stocks where we feel that, now after giving this breakout on the monthly chart, Tata Steel can also show furthermore upside. So 145 is the target where we expect, and on the downside, one can keep a stop loss of 132. The second stock is from this Asian Paint. That stock is also showing good traction. In the previous session, there is a long built-up activity was there. Looking at the daily chart, stock is moving in up-sloping channel. We believe that Asian Paint can continue furthermore upside, and we are projecting target of 3380 to 3400 on the higher side. One can buy this stock with stop loss of 3265. And third stock is from banking space, and that is from the PSU Bank. Bank of Baroda is looking promising. We discuss about some of the PSU Bank, but Bank of Baroda is also looking promising. Very strong breakout of its previous swing high of September 2023. Long built up is clearly there. So Bank of Baroda can scale up to the level of 235. One can buy this stock with stop loss of 219.
All right, those are some of the stock recommendations coming in from Rajesh. We also had queries on some of these stocks, Bank of Baroda included. So hope you got your answer there. But Rajesh, thanks a lot for taking out time and joining in and sharing your thoughts. As usual, pleasure chatting with you.
My pleasure.
But, before I leave, the IPO frenzy continues on Dalal Street. We have as many as 12 IPOs opening for subscription this week. The first one being Suraj Estate, which opens for subscription today. The issue price is somewhere around 340 to 360 rupees a piece. Whether or not one should be subscribing to it or not, log on to moneycontrol.com and you'll find a barrage of articles and, analyst views on whether or not this particular IPO is a subscribe or an avoid. So log on to moneycontrol.com. But with that, completely timed out on this edition of Morning Trade. Thanks a lot for tuning in from me and the entire team. But don't go anywhere because coming up next is Opening Bell.